Morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday. It's also National Donut Day, so hopefully, safely, you can take advantage of that. As far as markets are concerned, overnight, grains are a little bit higher. We've seen a pretty impressive rally in the grains, especially yesterday when the funds were big buyers of corn and wheat. The market, I think, is trying to take some gains that they've seen, especially in corn on the downside. As far as weather is concerned, there's no concern in the U.S. The warm temperatures will continue for one more day across the Midwest and will cool down for the weekend. Next week we're going to see some heavy rain starting in the Delta and moving into the eastern Midwest. The southern plains remains dry, but we're close to harvest there. The only concern that we have is that once we get into this zonal flow, conditions in the Midwest will be fine. But the northern plains and part of southern Canada actually could see less rain than normal, so we have to kind of watch that pretty closely. This morning's weather maps are a little less rain in France and a little less rain in southern Ukraine and southern Russia, so we'll have to see how that all unfolds. In the wheat market, we've seen a pretty impressive rally. We're about 25 cents above what some people thought was the midpoint of a trading range in July Chicago wheat, and the funds now are small longs in Chicago wheat. The market has been following the Russian and Matif wheat futures higher, and overnight the Russian futures are higher again, so that should be supportive. The key will be just how much is the crop down. Yesterday, one private group dropped the EU crop 3 million tons and the Russian crop 5 million tons. Not necessarily a game changer, but we'll have to see if buyers actually turn to the U.S. for some wheat. Right now, it looks like our export pace probably is a little less than what the USDA is saying for 19 and 20, and so the carryout could be closer to 1 billion bushels in wheat, which offers resistance to marketplace. Over in the corn, again, the weather looks favorable, and the drop in ethanol demand, even though we're seeing a slight pickup in production and demand and a little bit lower stocks, is still negative to corn. We're about maybe, let's say, 10 cents above the midpoint of the range, and some farmer consultants are suggesting farmers should take advantage of this 340 area in D's corn and sell some 2020 cash. Some people still feel a normal 16 billion bushel crop will increase the carryout over 4 billion for 2021 and put D's corn fall lows at around 270. As far as the beans are concerned, U.S. Is cheaper to China. We're still watching all the rhetoric between the two countries about Hong Kong and the implications there. So far, people are hoping that the grain deal is still intact, but that they may buy less than what was agreed on in the initial agreement. So July 1st is when we can first start auditing what they're buying. So they have been buying a small amount of U.S. beans for new crop, and we'll see if that continues and it offers support. We did see a little uptick in meal, even though most of the news is negative, and oil markets saw a little bit of profit taking after India announced they would have less imports of palm oil. As far as the outside markets, you've got the dollar at 3-month lows and crude at 3-month highs, and the stock market continues to move higher. So in general, the hope is that slow reopening of the economies will help the earnings, and that also that the virus will have some kind of control later in 2020 with a vaccine. So we'll be watching all the economic data, we'll be watching the weather, we'll be watching China for direction in the marketplace. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.